All right, we are about 3 minutes away from getting it going. Shout out to ODX014 for being the person to break the seal on the 2022 live stream chat. Welcome. All right, we got about 2 minutes to go. Shout out to all the people who have entered the HT giveaway. We've got Diginets, George Park 63. What's going on, Ronan, in the YouTube chat? And again, if you want to enter into our live stream giveaway for the week, type HT into the chat and we will get you entered. Basically, I think we just run down a little spreadsheet here. Random number generator at the end of it. Whichever one gets picked, you are the winner. And let me go ahead and get this thing started right here. I could probably do well to make this a little bit smaller. Here we go. That way we can see the timer. 1:30 until we get it going. And as always, I think let's make that text nice and big, right? Oh, that's not nice and big. That's 14. 24. We're going to bold it right there and make it seem a little bit more official. Let's go. I think that was the text we liked last time right there. That Calibri. There we go. The HT giveaway. Entry number. Username. All right. We are going to have a good number of people to throw on here really quickly right before we get started. 49 seconds until we get going. We've got... Cash is going to be someone who was not in the chat but requested that they would like to enter, so we got them in there at number 1. We got Diginets in there at 2. George Park 63 in there at number 3. We've got Neverender in there at number 4. Let me scroll down the chat a little further. 20 seconds until we get things started. Support break. Ronan McDonald, KB, Cliffo. Here we go. Scrolling through the chat here. We've got RNPF08. We've got Mahir. The timer's run out. Okay, we're going to dismiss that really quickly. We are going to get some more people lined up in here before we get things started. We've got Rich H. We've got Boston 13. We've got SGRAEBNER. We've got a lot to get it started this week. I love it. I love it. I love it. We've got HTs flying all over the place into the chat. Mahir said he threw 50 onto the Lakers, so he was considering throwing 250 on there, so I guess 50 is a good little compromise. I'm a big Lakers fan. I think betting on them is kind of throwing away money right there. But where was I in the chat? Let me pull the chat on the screen so you guys can see what I'm looking at here. We've got Happy New Year. Dario sees what's going on. Welcome back to the stream. You are going to be in there. Dario sees. Let's see. Okay, and I think we are now caught up on the giveaway. And ODX with the last second entry in there. I love it before we get started. ODX014 who kicked off the chat but didn't enter off the bat. So there we go. Type in HT into the chat to enter into our giveaway for an HT branded Yeti tumbler at the end of the stream. But let's get it going. The timer's up. We're gonna get this thing started. Welcome to the and if you type your name, type HT into the chat. We're gonna get back around to you. We'll kind of do it in 5 to 10 minute increments so we don't spend our entire stream doing this. But there is the initial list we've got. If you do not see your name on there, feel free to throw HT back into the chat, and we'll get you on there the next time we come around. But welcome back to our weekly live stream where we scan the stock market from an option selling perspective and talk about our plan for the upcoming week. But today is a very special day because it's the very first week of 2022. So we get to talk all about, instead of just doing a little quick weekly recap like we normally do, I think the better thing to do from the top of the stream here is going to be to talk kind of holistically about everything that we did so far in 2021. And 2021 was an awesome year for us, right? When it came down to it, we finished up with a return of 109.43%, which is fantastic. And I'm pretty sure that goes without saying that we outperformed the S&P 500 by a very, very good amount. I think the S&P 500 finished, there you go, 27.04%. So, when the S&P 500 typically averages between 9 and 10% per year, a 27.04% year is fantastic for the S&P 500. And the risk of our strategy really is that when the S&P 500 and the market has these great years, that we underperform. Our strategy is really built to handle pullbacks in the market. So the fact that we were able to come home with the, 110-ish% return in 2021 is awesome. We're going to take everything that we've learned in 2021, push it to 2022. And, it's always fun to wipe the slate clean because, being completely honest, ever since we pulled away pretty decently in June of last year, it was pretty clear that we were going to beat the S&P 500. So we were coasting a little bit, right? It was never too much in doubt what we were going to finish up at. So always fun to wipe the slate clean, give ourselves a new challenge for this upcoming year. And let's talk a little bit later in the stream how we're going to do that. But quickly, let's recap what we did in 2021. So off the bat, just generally speaking from, the shape of our chart that we have right here in our chart graph, it was kind of a roller coaster off the bat, right? We had a really good first month of the year in January. We took home a really good amount. February was a little bit shakier. And what I didn't like so much about February were these big dips that we had. And we had these big dips not only in February, but a little bit in the back end of April, beginning of May. And I got to the point where, we have a pretty demonstrably consistent strategy that we've been putting into play. We've got really consistent gains, but the trouble that we would find ourselves in was when the market pulled back, we'd be a little bit over leveraged. We'd be a little bit too aggressive with some of the strike prices that we were targeting. So I wanted to do my best, at the midpoint of the year when we already had a decent lead on the S&P 500, I wanted to do a decent job of taking some of the roller coaster out of play and getting smoother, more consistent, reliable, just generally less stressful returns. And if you take a look at our chart, while we did have a little bit of a misstep at the beginning of December, by and large, we accomplished that goal of smoothing out the profit curve while still getting comparable returns, right? We're not going to have these super huge months anymore where we're making 17% in a month. But at the same time, we're going to try our best to eliminate these weeks where we lose $9,000, $7,000, $15,000. And, middle of July is really when we switched over to this newish type of strategy to kind of flatten the curve. I don't know if you've heard that line before, but to kind of flatten our profit curve and get things a little bit more consistent and self-sufficient on a week-to-week basis. And that's what we accomplished, right? If you look at the front half of the year on our weekly summary right here, a lot of red, and a lot of these red numbers are big numbers. If you look at the back half of the year, we really only had one big misstep, and that was at the end of November, beginning of December. We could talk about that a little bit, and we have talked about it previously on our streams, but by and large, of the, however many weeks there are right here, there are count 24 different weeks right here. We see 1, 2, 3, 4, 5 losing weeks. And what's more important is that the magnitude of these losing weeks, like 2 of these 5 losing weeks, are less than $1,000. And, we can cover that loss quickly. As you can see, the average just throughout this period is $1,600, right? And that includes this big step back that we had at the beginning of December, which, we'll further be cognizant of and try to reduce things like that going forward. But in general, I think we have plenty of evidence on paper that what we're putting forth, this type of strategy with, getting a lot of the roller coaster type weeks out of the way and focusing on more consistent gains is something that we've been able to accomplish. And we've accomplished that by following a few main goals. I wish I had some sort of, graphic I could put on the screen here because it's probably kind of boring for you to hear me talk while you're just looking at our yearly summary tab. But, number one rule is the golden rule when we sell options. And that's that you don't want to sell puts or sell options on something that you're not comfortable owning at that strike. When we go through our scanner results, if we go to our scan tab in Thinkorswim, when we pull these up, you're going to get a ton of different results on a week-to-week basis, right? And sometimes it could be really, really tempting to just take the top thing off here and say, okay, an 8.63% return is awesome. That's, a great return. I'm just going to blindly sell these. And will that work? I mean, in theory, most of the time, and by most I mean greater than 50% of the time, it should work. But the pullback, or the drawback rather, is the fact that, a lot of these up here are super, super risky setups. So the compromise that we have right there is to target something in the 1, 2, 3% ROR, return on risk ratio on a weekly basis. And in this range, we find, less risky, better setups that we can consistently try to target and, change our profit graph from looking like this on the front end of 2021 to looking like something that we had on the back end of 2021, where it's a more steady grind towards the top. And that, these aren't insignificant returns, right? It's not like we took our pedal off the gas and we're basically breaking even from July onwards, right? If you look at, July onwards, we made $38,000 in the last 6 months of the year. That's a little bit less than what we made on the front end of the year, but you have to consider that, what we're doing up front was a little bit riskier. And the way that the market has looked, we haven't really had a meaningful correction since the COVID crash. And, I just can't help but get that feeling in the back of my head that we're kind of due for something like that. So it's not that we're taking our foot off the gas. It's just that we're mitigating a lot of the risk that would come with the potential market crash. And we're going to do that in a variety of ways, between diversifying stocks that we play, diversifying types of option selling strategies, and diversifying, things like industries as well. And that's something that we're definitely going to want to be focused on in 2022. So that one golden rule of, only selling things that you are comfortable with owning is really the one big thing you want to make sure that you stick to. Another thing, as far as the rules that I try to follow, is something that I did touch on during that explanation, which is targeting that 1% or greater ROR on a weekly basis. Remember, you're not going to want to pick exactly from the top of the scan. And for those of you who have been following us on a week-to-week basis, first off, welcome back. Love having you guys on the stream, but hopefully this doesn't sound too repetitive for you. But, one of those things that I can't help but feel, you can't say it enough, right? Because it's so important. Looking at the potential profit on a trade is almost less important than evaluating a potential downside, because, we could hit a million trades in a row, but it really only takes one trade to derail everything that you've done. And we had a little bit of a scare at the beginning of December, but we stuck with our strategy, even though we got a little bit too risky at the front end of that month right there. We're able to recover relatively quickly. And what was one of our worst weeks of the year was recovered so quickly, in fact, that we didn't even lose money overall in that month. And one of the other things that we like to hang our hat on is the fact that we didn't lose money a single month in 2021. And that's something we definitely want to keep going. If you take a look back to 2020, we didn't lose money in November or December. So that's 14 months in a row of making money in the market. So we're definitely going to try to keep that up. Where we have fallen as far as how we've performed against the S&P 500 has been a little bit variable, but definitely consistent. We did underperform in December slightly, but that's okay. If the S&P 500 returns 3.48% in a month, that's better than what it'll typically do. If we're pulling 2.66% a month, we're perfectly happy with that. Where we're making our money, right, is when the S&P trades either flat or trades down, and that's when you get these big differences, like in November where we took home 3.5% and the S&P 500 lost money, or in September where the S&P 500 lost almost 1.5% and we took home a similar return, 3.64%. So the idea is we're selling options in a way to kind of stabilize cash flow, giving ourselves big enough cushions that we're taking home a decent amount of cash on a week-to-week basis, or month-to-month basis rather, to the point where as long as the market isn't dipping too much, our returns aren't going to be that greatly impacted. So that is kind of what we did in 2021. Awesome return objectively, obviously 109.43%. We'll probably get the question, do you think you're going to be able to do that again in 2022? And off the bat, I would say no. If you expect to make 109% a year in the market, you're out of your mind. If it were that easy, everyone would be doing it. No one would be working. And, that's that, right? Now, I do think we can have similar success through the lens of outperforming the market, which we have demonstrated in the time that we've been publicly tracking our trades across 2020 and 2021. So that's really our goal. If I had to set kind of a loftier goal for what I'm looking for in 2022, I think that 50% return goal is something that I would tend to try to target, because that falls just under that 1% return per week number that we like to look at on a minimum when we're selling options. So I think 50% is kind of what I'm going to try to be targeting for the upcoming year in the stock market. Now, we could look back a year from now and say, oh my goodness, the market crashed, S&P 500 finished down 30%. And if we just broke even, didn't make a single dollar, but didn't lose a single dollar, that's something that we would also evaluate as a success. So it's tough to kind of pin an arbitrary number to what we want to do in 2022. But the real goal and everything that we're trying to do and what we set forth here and what we teach and what we trade is laid out in this chart right here, how we're doing, against the overall market. So as long as we can continue to use all of the tools that we have at our disposal, continue to use all the strategies that we have and we teach to, generate a greater return than what we would have gotten otherwise by just letting our money sit in the market, we are succeeding. And that's something I definitely think that we can continue to do because we have some advantages, quite honestly, as retail traders. But I think that's a pretty good recap for 2021. I'm really thankful for everyone that's been joining as part of our community, you guys who have been on the streams on a week-to-week basis, who have participated, and hopefully those who followed along have hopefully found some similar success in 2021. The community is awesome. I've enjoyed talking to you guys every single day of the week, enjoyed borrowing some of your trades. I hope you guys have enjoyed borrowing some of mine. I know as a group, we kind of crushed it in 2021, so hopefully going forward in 2022, it'll be much of the same. So how are we going to keep that up? And I guess let's jump right into it, right? Quicker recap than normal because I guess we chose to recap the year instead of the previous week. But let's get into what we are going to do for the upcoming week to kick off 2022 and how we are looking, to get off to the right track, right? Because how you perform in January, is so important, right? Because if you're in a hole and you lose 10%, not that, the types of trades we're making are going to put us at that level of risk, but if you lose 10%, it takes a greater than 10% gain to get you back up to break even. So kind of how you start is almost in a sense more important than how you finish the year from a return perspective. But before we get into that, let's go back to our, where is it? Oh, it's sheet 20 right here. No wonder I couldn't find our HT giveaway tab right here. And I might as well just rename this to HT giveaway. There we go. We've got some more entries. I'm going to pull, let's see. We left off at ODX. That means we've got a few more entries in here with Sam H421. And again, if you are watching the stream, you want to enter into our giveaway at the end of the stream, feel free to type HT into the chat, and we are going to get you entered for your chance to win a HT branded Yeti tumbler free of cost. So we've got Sam H421. We've got ASHOKBAS. Sometimes I just don't even try to pronounce some of these things because it makes me sound dumber than it's worth. We've got Dan. We've got Marvin in the YouTube chat. Who else do we have entering here? We've got Chi Wong in the YouTube chat, and I think we are now caught up on entries. If you think you've tried to enter and don't see your name up here, feel free to let me know, and I'll get you entered in here as number 24 in our HT giveaway. But let's before we get to the main event, and I know we said we were about to do that before we had a little segue on the HT giveaway. One quick self promo plug for HT Premium, the service that we offer here at Hourglass Trader, right? And that is going to be, if you go to our website at hourglass-trader.com, I think if I type in H, it comes up. There we go. Hourglass-trader.com. And here you have our website. The one commitment that we make to people who are trying to learn the strategies is that it's always going to be free to learn the strategies that we put into play. It's always going to be free to join our general Discord server, ask questions, watch the videos, learn the strategies, because I think above all else, the reason that we started doing what we're doing is because there's so much misinformation out there on the internet, right? You have people with how accessible investing has been. A lot of people are just getting into it in the past year or two, which is a great thing to do. It's a great thing to invest in your financial future, but unfortunately they get misled by people who claim there are big shortcuts in the market. They can help you turn $1,000 into $10,000 in a year, which quite frankly is, if not impossible, entirely unsustainable, and it's just going to lead to you losing more money. But, save the fact that these people who kind of get misled by these people had good intentions, and we want to lead you to a place of responsible investing. So that's why everything we offer from an education perspective is always going to be free. That includes the videos we make. If you go to education, we talk about our HT wheel strategy. We talk about spreads. But what we want to have right here for what we're plugging for our self promo is going to be our HT Premium program. $25 a month or $225 a year, which is a 25% discount from the monthly plan. You can get a free trial for 7 days, no financial commitment, so you can decide if it's for you. We 100% recognize that everyone's financial situation is different, so if you try it out, decide it's not for you, no harm, no foul. We always want you to do what's best for your situation financially. But what do you get with that? Most importantly, we talked about what we did in 2021, and if we go to that 2021 weekly tracker, right, you could see all of our trades here. From our Discord server, you'll have access to this spreadsheet. You'll also have access, if I pull the Let me pull the Discord server tab over here. But you'll get access to our Discord server, and you will get access, once the white screen disappears, there you go, to our premium channels in the Discord server, right? We have a premium chat where there's a really good amount of activity as compared to the main channels that you'll see right here. But really, I think the greatest value that HT Premium provides us with is going to be HT trades, where we alert every single entry, every single exit to every single trade that we made. So if you're seeing what we're doing, we're sharing our results, you're like, how can I, recreate that? You could pretty much recreate it identically with these trade alerts. And we also have a couple other channels in there for different trading strategies. Every now and then we'll include some trade plans for what we have for the upcoming week. We've got a watch list with tickers that we keep an eye on. And one section that we've updated recently is our option scanner section on the website. Let's see if I'm signed in and this is going to work. Please, please, please. There we go. So, every time we try to find trade ideas, because one of the questions we get so often is, it's great that you have all these trades, but if I want to find some on my own, what's the process that you guys use to find the trades? And option scanning is one of the best places that we start with. And this has links to all of the scanners that we use, has links to our option scanning videos with instructions. And if you don't have Thinkorswim, because that's the software that we use to run our scanners, we have some web-based scanners that are helpful as well. But for example, if you wanted to borrow our high ROR puts scan where there aren't any earnings because those are filtered out, you'll click on this. There you go, the high ROR put scan. You click view in Thinkorswim, and it's going to upload or import that scan into your software. But that's some of the stuff that you get with HT Premium. I feel like I also probably need to do a better job of explaining exactly what comes with HT Premium, but those are kind of the bigger things: the chat room, the trade alerts, the option scanners, and above all else, the community we've built in the Discord server. It's a great place to be on a day-to-day basis, just to keep up with the market and keep up with trades and improve your skills as a trader, because it's not just me. We also have several talented people in that chat room as well to make our community what it has been built out to. But that is the last of the self promo I'm gonna do. We've got one more quick entry from jgold1235. Congratulations to entry number 24 of the night. 1, 2, 3, 5, and now we are gonna get started with, we did so well in 2020. We did really well in 2021. How are we going to keep that success up in 2022? And the answer, let's take a look at what we've got. So from a standpoint of what should I enter into, we always think what we have off the bat. If you're not in any of these are really solid trade ideas, because we try our best when we trade to avoid falling into some sort of sunk cost fallacy, meaning that, if a trade's moving against us, it can be really easy to say, I'm going to keep in this trade, I'm going to stay in this trade, I'm going to stay in this trade until I recover. But, objectively, if you had $0 to tomorrow and you were going to enter into a trade, is this trade something that you would want to enter into? And if the answer is no, you shouldn't keep chasing it. But we ask ourselves that about pretty much every position that we're in when we're evaluating these types of things, and we still have answered yes, that these are positions we would still enter irrespective of if they were parts of larger overall trades. Question from Dan in the YouTube chat: are the alerts by text or only through Discord? And the alerts right now are only through Discord. However, if you quickly, if I pull this back over, if you take a look at the actual alerts we have, right, we tag the HT Premium members in these trades as well. So they'll come across your phone via push notification, no different than if you were receiving a text message on a smartphone. So you do get alerts that way. They do come directly to your phone. You don't have to actively be in the Discord app to receive those alerts, and that is how that works. So from top to bottom here, let's talk about what we've got as we kick off 2022. And again, if you guys have trade ideas of your own or stocks that you think might look interesting, feel free to throw those into the chat, and I'd be happy to look at them as we move through the stream. And there's Jules with the Christmas tree emoji. Shout out, Jules. How's it going? But, top to bottom, we've got 1,000 BRPM shares. We have these at a basis of roughly 1080-ish, which obviously is not the best when the stock is down to 1012. But we've got a full-length YouTube video on our channel about why we feel that this is a solid investment. And the biggest thesis behind this is the fact that this is a SPAC, meaning that there's a price floor of roughly $10-ish a share. So there isn't too much more downside in this. Could it stall out at 1012 until the merger and then we would just dump the shares for 1012? Absolutely. But there could be some interest drummed up before the merger, which would cause the stock to shoot up. But long story short on this one, if you do choose to pursue the shares, our plan personally is we're not going to hold these through the merger, through the reverse SPAC merger as they merge with the FaZe clan, because that's when that price floor of $10 a share goes out the window. So we're going to keep an eye on the news with BRPM. Whenever the potential merger comes across, we are going to get rid of these shares, right before that occurs. So that's the plan with that one. Since there's limited downside, I'm perfectly happy to just keep holding on tight with that and just see whatever happens. Palantir is one that we have, for those of you who have been following us for the past few weeks, definitely been stuck in this one a little bit. And this is typically what this looks like on a trade-to-trade basis when we have been in something for so long, right? If the stock's gone down 26% on us, we're definitely going to be sitting on a loss. But what we did interestingly with this one was we were playing with the 20 strike straddle. And we got to the point, right, if we took a look at the option chain for Palantir, let me type this in really quickly to give a little context to what I'm saying here. With Palantir, this 20 strike straddle, we got to the point where for expiry this Friday, January 7th, because we like to sell weekly options, there really wasn't that much premium. From an ROR perspective, I guess if you look at 6 cents of return, that's less than 1% ROR. That is not what we really want to target. So from that perspective, when we talk about the sunk cost fallacy of, is this a trade, a 20 strike straddle on Palantir, something that I would have opened if I had no money in the market? The answer is no, because that's just not the type of return that we go for. So what we did was we rolled it down to 18.5. And from there, we could see that at the 18.5 strike for a put, we get 3.41% with the premium of about 61 cents as it stood as of market close on Friday. And then, similarly on the call side, there is 33 cents, but I think what we did 19.5 instead of 18.5, I believe. So we went from a straddle to a strangle. Straddle is if the strikes are the same. Strangle if the strikes are different. We went from straddling at a 20 strike to strangling with 18.5 strike puts and 19.5 strike calls. We were able to sell those for 19 cents, which around that 19 strike represents roughly a 1% ROR on the credit, while similarly leaving us upside to 19.5 on the shares, which alone would generate about $1,290 of profit for us on the shares. So we were happy with, one, the credit that we received on the calls that we sold as covered calls, and two, the amount of upside that those covered calls still left us, being able to make about $1,300 on the shares. Not to mention, if it got up to 19.5, it would finish above 18.5, where these would expire worthless as well. So we, find ourselves in a position where our max profit on Palantir, if it jumps back up to 19.5, is $2,000 on the week. So if we take a look at Palantir's chart, and this is something we've looked at so often, so feel free, or I guess prepare yourself for the amount of red lines that we have right here. This is our max profit point, and I really don't think it's something that's that far out of the question, right? We've pretty much established at this point that 18 is going to be a really decent area of support. However, the issue is that this low 19 number, almost 19 on the dot, is also an area of resistance. So it's kind of a game of back and forth between 18 and 19. When it's going to come out of that range, I don't know. But if you look at the trading history for Palantir, it does kind of behave this way, right? For the longest time, it was bouncing between, low 20s, high 20s. Now, granted, that's a much bigger range than between 18 and 19, but this is a stock that tends to get a little bit range bound at points. And as it does stay range bound, all of these premiums are just going to be evaporating, decaying, and expiring worthless. So that's why we want to take advantage and sell these 18.5 strike puts, instead of trying to get a little greedier and bite off more by going with 20 strike puts or something like that, which leaves us more upside. Palantir is a stock that we liked it at the 24 level, so we love it even more at 18-ish from an entry perspective. So as far as continuing this trade, perfectly happy to keep that up as it is, as it's been planned. We like to put hypothetical prices in here to see what kind of profit we stand to make heading into the week on certain trades to evaluate, if we're set up nicely. And I think we are on this one, right? Because the best way to, I guess, evaluate these is what would they look like if the stock price stayed exactly the same. So if it stayed at 18.21, these would be worth 29 cents a piece. These would expire worthless, and that would be roughly what, 510 right there. That'd be $510 of profit off no movement at all in the stock. If it recovered up to 18.5, which is I think a reasonable recovery after how much it's dropped, that profit now goes to $1,000. So I think there's some decent upside on Palantir from where we've entered into. I think our break-even price on the week is 17.95, which is what would happen if that went down to 17.95. These would go up to 0.65, and then we'd have that right there. Not quite. It's a little bit higher than 17.95, I guess, our break-even, because that would make us lose 110. But the idea is, as long as this stays above 18, we're going to make money this week on Palantir. So we've got a decent little cushion right there, and this is something I've tried to build out as well in the profit tracker to kind of give us a little bit of peace of mind when things start to move against us, because it can be so easy to get into a trade, especially if you haven't done this very much, right? I think the psychological aspect of this is one that's really, really tough to master, because it could be, your money's important to you, and that's a good thing, and that's going to help you when you're trading because it's going to make you want to protect your capital. Protecting your capital is so important if you want to be a successful investor in the market. But with that, you can kind of get a little bit emotional when you trade, right? And if these stocks, from a price point on the stock, start moving against you, it can get very easy to get scared out of a trade. And if, Palantir dropped down to 18 off the bat, you might get scared and say, okay, I'm already seeing a little bit of a loss on paper here. I'm just going to back out of the trade entirely. But what this does over here is tell us, hey, on a week-to-week basis, these are the prices we need the stock to stay above for us to just make money on the trade. And if you look at Palantir, it could drop 1.43% this week. We'll still make money. We look at DraftKings, which we'll talk about in a second. It can drop 2.84%. Fubo can drop 3.87%. And, Robinhood could drop 6%, and we'll still make money on those. And, at the heart of it, that's the value in the strategy that we're running. Because at the end of the day, no one knows if a stock is going to go up and down. If someone says they do, first off, they're lying to you. Because second off, everything in the stock market is a guess. Now, you can make educated guesses about things, but in general, things are guesses. Something may go up long term, but next week it'll be red before it goes up long term, but you'll lose money in the short term, and sometimes that could scare you out of a trade. What's great about our strategy is we can make these educated guesses about a stock and at the same time give ourselves some cushion just in case things move against us. And these are the kinds of cushions that we're working with on a lot of these stocks and a lot of these positions that we're in. And that's granted to us through our option selling strategies. So that's Palantir for you. Let me put this back to 0.61 so we can zero everything back out. And I think I need to update this formula so that everything else works. If I go equals this, come on, equals this cell minus the commission. Bear with me as I add this all up. There we go. So for example, if Robinhood hit max profit, there you go. Now we're starting to see a little bit of a return. Let's see. So we've got the Palantir break even. Yeah, good question from Honest Ave in the Twitch chat. The Palantir break even is different on the breakout tab. So for what I'm doing over here, this is just on a week-to-week basis, what it would take to make money on Palantir. Now, if you've been following along the little, stairway to hell that we've been following with Palantir, you'll know that we started playing this thing at 24. So our break even on the overall trade is going to be a little bit higher than that, right? This is our break even on the overall trade, and it's going to take a little bit more than 1 week to make that back. But, over here, we're looking at things from a weekly perspective. This is just our weekly perspective to be green on Palantir. This is our overall break even to be green on that entire trade as it dates back to mid-November before it dropped 26.57% on us. And, that's okay that it's dropped that much, because what I like to say so often about these losses is that they're temporary, right? Because on a week-to-week basis, we've demonstrated we can continuously lower our break-even price, but the stock can't really go down forever. DraftKings has been a great example of us being able to do that, right? We started out with a $4,000 loss, and we've gotten down to the point where we started playing it at 36, and now our break-even is below 20. It's below 30, and I haven't updated it for this week's trades, but now it's below 29. So we've done a really great job, I think, with rolling these prices down, moving that price target on a week-to-week basis. Just because we lose 1 week doesn't mean that we're going to lose that entire trade. Our option selling strategies give us a great opportunity to lower that break-even price. Try it again next week, and stocks aren't going to be red forever. I like to compare it to roulette, where the gambler's fallacy is that it's hit red 7 times in a row. Surely the ball is going to land on a black square time number 8, but that's not true, because as far as roulette is concerned, gambling is a series of independent events. However, if a stock has been red for 7 weeks in a row, it's a little bit more likely that the 8th week is going to be green, just because, the stock market is not a series of independent events. Selling creates buying opportunities. So 7 straight weeks of selling, hypothetically, would create a great opportunity for buyers to come in that 8th week. And, mean reversion, meaning, even when things get a little bit oversold, they bounce back up, or when things get overbought, they come back down. The idea of mean reversion is one that is very well observed in the stock market, and is kind of one of the biggest ideas that our strategy itself is based around. So if we go back to the weekly tracker, that covers Palantir. That's why we have those 2 different break-even prices showing. DraftKings we'll talk about really quickly. Let's update that HT giveaway tab first. So we have some new entries coming in. We've got Jules. Here we go. We've got Andy S in the YouTube chat. We've got Will. We'll just call him Will Stock. He seems to be a man of many names. He's Will F DIY Vids in the YouTube chat. I love it. Hey, always appreciate people who have got side hustles on YouTube because I can very much relate to that. But now we've got 27 entries in the HT giveaway. We're going to go for maybe 30, 40 more minutes as we get through what we've got for the upcoming week. We'll kind of round out what we're holding on to, evaluate our current profitability, and then hop over back into Think or Swim for the scan and try to come up with some new ideas for the new year. But, next one on the list is going to be DraftKings. This is one I'm really happy with, owning the stock, right? I'm not happy with how the stock has gone since we entered into it at the 36 level because, this type of pullback is just insane, right? On a 180-day basis. Normally when you see this kind of sustained pullback, there's a decent bit of a rebound, and that's just kind of what we're holding out hope for, right? It's at 27.47 as of market close on Friday. We sold 28 strike puts. We just need to get back up to 28, which is not that big of a bounce at all to make money on it on a week-to-week basis. Let's pull up our favorite study, RSI right here at the top of the list. And we'll see that's still a little bit oversold, right? Below 50 is oversold. When it gets down into the blue, that's when we really, really like to jump on the opportunity. And you could see why, right? Because the last time the RSI was in the blue happened on December 29th, and the day after it jumped up from 26 to 28, almost a 10% jump in one day for DraftKings right there. But that is why we like to look at RSI as an indicator of when we could realistically expect a stock to rebound. And, it's not telling me too much here sitting at 43, but from an overall trend, I think if we back it up a little further to, the 3-year chart, there you go. We've got RSI just in the absolute gutter right here. And even though a stock can be on a really, really bad slide at times, it's starting to look like it's finding a little bit of a base, and that's kind of the price action you get right here. We can maybe compare it to what we saw halfway through 2020 where there was a little bit of a slide. It started to find a base, and then it really ripped back upwards. That's not a guarantee that it's going to shoot back up to 40 or anything, but, with our strategy, we've been lowering that break-even price week after week to the point where, even if it just jumps back up to 30, which is, far, far below where it is historically traded, a jump back up to 30 from 27 is incredibly insignificant when you take a look at a stock that peaked at 74. So even just a small jump like that would turn us back profitable. So that's what we're looking forward to for the upcoming week. And again, evaluating potential profitability here. 28 strike put for $1.31 means that your break-even price is going to be $26.69. We're still trading about 2.84% above that. So, plain English, DraftKings can still drop 2.84% in the upcoming week, and we'll still make money. But with where it closed on Friday at 27.47, we know that a 28 strike put would be worth 58 cents at close because that's the difference between the 28 strike and that 27.47 closing price. It would be worth 53 cents, meaning that we would make $780 just if DraftKings traded flat. If it bounced up 50 cents back up to just 28, which is a very insignificant bounce in the context of how much it's been moving, we'd take home a $1,300 profit. So again, this is kind of how we try to build out our week and evaluate the potential profitability that we've set ourselves up for, right? Even if Palantir had a little bit of a rebound to that 18.5 level and this expired worthless, which is what would happen at 18.5, all of a sudden, we're at $2,400 of profit. That's a 1.33% return. We said we're only going to be targeting 1% a week. We're already far and away above that, and we still have, 4 more plays on here, which this is just the list of trades that we have heading into the upcoming week, right? If we take a look at how our weeks typically look, you'll see that we have longer lists of trades at the end of the week because we like to enter into trades. It's great to have a plan Monday morning, but Tuesday, Wednesday, intraday, Thursday, there's so many things that happen in the stock market that give you opportunity for entry that, the little list that you have going into the week almost inevitably becomes double size by Friday. And that's by design, right? Because it's great to have a plan going into the week, but a lot of what we want to do is to keep cash on the sideline to react to the market as well, because the intraday movements in the stock market can provide very, very good premium selling opportunities for us. And that's one other quick thing I want to highlight is that, I'm trying to do a little bit better job of keeping track of what I'm holding from a fully cash secured and then margin perspective, right? Buying power wise, I'm only using about a fifth of my buying power. But if everything were assigned to me, I'd be using 63%, which is pretty low right? We do use margin here, and as of right now, we're not using any at all because we're at 63% fully cash secured. But I do like to have this in the 90 to 100 range fully cash secured. When it gets up towards 150 or above, that's when I'm, maybe want to take my foot off the pedal a little bit if I have something that, I really think is a great opportunity. I'm okay with having it up there, but, if something's not really jumping off the page, we kind of just want to be coasting at this lower number. And, just because we're at this lower number, that doesn't preclude solid gains, right? We've seen just from our Palantir and DraftKings position that, we are already in position if things have just a slight bounce for us to pull a really nice weekly return. But that is kind of the point we're trying to make with all that and evaluating these positions one at a time, seeing where things would reasonably end up and evaluating the position that we're putting ourselves in as we enter into the week. So the next one I want to talk about is FUBO. We have currently the 15.5 strike puts that are going to expire this Friday on January 7th. Now, this is a continuation of an earlier trade that we entered into where we sold. Let me pop over to the tab right here. I can show you guys kind of how this one works because I don't have the trade tab built out yet. But we originally sold FUBO 16 strike puts for 16 cents a piece. And we did that at the beginning of last week, right? So if I pull up the FUBO chart, let's kind of take ourselves down the path that this trade has followed. So we sold those when FUBO was, I think right before FUBO dropped down here. So maybe 17.5-ish a share. And when you sell 16 strike puts at 17.5 a share, you've got yourself a decent little cushion. And that is kind of what we were relying on. But, as happens sometimes, FUBO took a pretty significant drop from this 17 plus level all the way down below 16. But this is why we give ourselves the cushion, right? If we just straight up purchase these shares at the 17.5 level, we'd be sitting on an over 10% loss. So what we decided to do was we sold 16 strike puts. Obviously you could see by the chart, it dipped back down below 16. And if we go to the 5-day chart, it was kind of suspenseful on Friday there because at, 2 p.m.-ish, it was treading right around that 16 line, and then the ultimate drop down here kind of crushed us a little bit. Very disappointing, but through that disappointment, we've been disappointed before, right? This is something that's going to happen. We're not going to win every single trade right off the bat. But what do? We follow our strategy. We were prepared for that. So we closed for a 42-cent debit. And let's keep in mind that off the bat here, if this trade hit max profit, we would have made $160. So let's keep that original potential max profit in mind as we walk through this process. So we incurred a $260 loss by doing what's called rolling the position, meaning we closed the first one, we opened the second one. And what we did was we rolled for a credit, meaning that we closed for 42 cents, meaning we bought to close for 42, and then we sold to open for 58 cents, as you can see right here. So that's selling for a credit, meaning we sold for more than we bought it back for. And the great part about this, you'll know, is the 16 strike that we had right here compared to the 15.5 strike that we're currently in, is that as you lower that strike, you lower your max profit point. So instead, where last week we wanted to keep it above 16, this week we just need to keep it above 15.5, which it currently is, right? It closed at 15.52 and had some after hours movement further above that level. So we're kind of quote unquote back in the green of where we need to be from a break even perspective. And we'll remember that originally our max profit on the trade, if I click back to this tab, which is terribly hidden over here from me, our max profit on original trade, if it finished at 0, was going to be 160. Now that we rolled it, if you take that 260 loss combined with potential max profit of 580, 580 minus 260 is now 420. I think I did that. That's horrible math. It's 320. 560, 580 minus 260, 320. That sounds right. Okay, it's $320 of profit as opposed to the original 160 that we were looking at. Apologies for the shaky mental math there. But, since we rolled for a credit, not only did we decrease the strike with that and give ourselves another option to make profit this upcoming week, we also increased our max profit by the credit that we received. So in general, if we ever have the opportunity to roll the strikes 1 down and 2 out, meaning down to 15.5, and 2 out to January 7th for a credit, meaning that we sell the new one for more than we bought the old one back for, we're going to take that because it, 1, decreases the max profit point from 16 to 15.5, and 2, increases the potential max profit on the overall trade. Only downside there is that you have to wait another week as opposed to getting that $160 of profit last Friday, but we've got all the time in the world, right? We can afford to wait another week for an extra $360. That's something that's perfectly okay with us because
Formerly a lot of people who come and join us as option sellers were formerly option buyers. And, if you were playing with Fubo last week with a 16 strike call or something like that, your trade's over. You lost and it's done. You passed your expiry. With option selling, we didn't win last week. We moved the target down from a max price point perspective, and we moved the target from an expiry perspective, 1 week forward, and we just wait again. Okay, so before we go on to Robinhood, one question in the chat that was an interesting one was from Rodrigo Ricardo in the YouTube chat saying, hey, I was thinking of wheeling TQQQ. Do you think that's a good idea or not? So if we look at TQQQ, let's pull it up right here. TQ is the ProShares Trust Ultra Pro Triple Q ETF. And to Rich Wheels' comment in the Twitch chat right here, 1% per week is what we're targeting just on individual options, right? So if we were going to go to the option chain for TQQQ, we would want to target something with a 1% plus ROR. And the idea is in aggregate, if we put enough of those into our portfolio overall, we'll be getting that 1% return per week. And for some of those, you're going to have to go higher. You're going to have to go a little bit closer to the money to get that. But that's in general, we're going to be trying to target a minimum of 1% ROR on the options that we get. And then the idea is those all average out to make our portfolio average 1% or more per week. But to jump back to TQQQ, I'm pretty sure this is a leveraged product. Let me double check on that really quickly. Not the fundamentals tab, I need to type in the analyze. No, it was the fundamentals tab. I'm not positive if TQQQ is leveraged, but I'm pretty sure it has some serious volatility on it, right? Yeah, so if you take a look at this, right, what's a little bit scary with these is, one, the fact that it's gone from 22 to 166, which is an 8x increase over the last 3 years, or last 2 years rather, because I guess last 3 years. It's 2022 now. Got to wrap my head around that. But in the last 3 years, it's gone up 8x, right? And we really haven't had a significant drop in the market. The only observable significant drop in the market that we've seen, and I guess I should caveat that by saying we haven't really had a significant observable drop in the market lately. We did have the COVID drop over the last 3 years, which we can take a look at. Sam H421 is saying it's triple leveraged. Great to know. We don't want to play these leveraged ETFs, and this is why, right? If you take a look pre-COVID, I mean, it's great. You look at the 3-year perspective. You say, okay, the returns on this are fantastic. But what happens when the market goes down? And that's something that we really always want to keep in the back of our mind when we're trying to enter into a position, especially for people who have started investing in the last year or two, post-COVID crash. It's really easy to have been lulled into this false sense of confidence because the market, quite frankly, is basically taken a straight line up over the last 18-ish months, right? So that's something that we definitely want to be wary of. You don't want to get used to these past market conditions, right? Because as we took a look at the top of the stream, the S&P 500 ETF, SPY, returned about 27%, and that's not normal. It averages 9 to 10% per year. So things typically don't go up this much, this fast, this consistently. So this is not a trading environment that you want to, get too comfortable in. And to illustrate the point of why leveraged ETFs are dangerous from a perspective of our trading strategy is, yes, we can sell puts out of the money to give ourselves a cushion. Yes, we could target stocks that have decent premiums. But the issue, and even though, yes, we could continue to lower our break-even price week after week, the big issue is what happens when the stock falls more quickly than we can lower our break-even price. And, with leveraged ETFs like this, that's 100% a situation that you can find yourself in, right? Because at the peak right here back in February of 2020, before the fateful COVID drop in the market, TQQQ, the top of this candle, looks like it was about $56 a share. And at the bottom, it got down to $16.14. And that happened in the span from, this is the week of February 17th, and this is March 23rd. So this is slightly over a month, and this thing dropped basically 70, 80%. And that is something that we really can't manage with this type of a strategy. So if you are looking for maybe like a long-term investment or something like that, if you can catch this at the bottom, you say, I just want to buy some stock, maybe that might be for you. But from the context of the option selling strategy that we like to use, we always want to be cognizant of that potential downside, make sure we protect ourselves against it, and try to avoid stocks that could potentially put us in that severe downside position. Triple leveraged ETFs like TQQQ are kind of fall into that category of somewhere that the stock price can drop faster than we could catch up to it with our break-even price. Biotech stocks are something that come up really often in our scans, and really similar category. We want to avoid something like that or avoid finding ourselves in that kind of a situation. So, leverage ETFs, biotech, things like that, where there's really an observable potential short-term decrease in price. We want to avoid that. So as far as wheeling, TQQQ is probably not the best idea. And it is it's tough, right? Because you'll go on social media, and to that point about how the market has performed over the past 18 months, I think the Theta Gang subreddit is one that I like to read a decent amount from an option selling perspective on Reddit. But you have a lot of people on there who've only been doing this for about a year and are leveraging these dangerous products, quite frankly, without entirely understanding what they are. And they're like, these are my great returns. People are like, okay, great return, wheeling, that should be safe, right? Not always. It's very, very important when you're picking your underlying and TQQQ, leverage ETF, just to fully hammer that point home, because I think it's a pretty important point to make. Not one that I think is great for running the wheel on. So with that said, before we jump into Robinhood, we've talked about Palantir, we've talked about DraftKings, we've talked about Fubo. Before we get into Robinhood, let's update the HT giveaway tab right here. So the last one we had was Will Stock. We now have JJP in the YouTube chat. We now have, let me scroll a little further down the chat that I have in a different window that you guys probably can't see. There we go. We've got Escota 82. And I think that's all we've got. So JJP, oh no, I completely missed that. There we go. JJP, Escota, entries 28 and 29. Welcome to the HT giveaway and welcome to the stream. And if you are watching the stream right now and would like to enter into the giveaway, throw that HT into the chat and we will get you entered right away for the drawing for an HT branded tumbler at the end of the stream, which is coming up pretty soon. We're coming up to the top of the hour, 10 p.m. Eastern here, but let's definitely get through the back end of at least what we have going right now for the upcoming week, and then definitely going to want to take a look at the scanner to see if we can have some more HT wheel-based strategies. We're going to want to take a look at upcoming earnings for this week, because that's another really great opportunity for selling option premium. But before we get into Robinhood, I'm going to take a sip of water. I think this could be a personal record for the amount of time I've just talked straight without taking a sip of water. All right. Some great news on the personal HT front is that my freezer is doing a little bit better with the ice maker. It was not working so well over the last few weeks. It is back. It's better than ever. Really, really solid sip of water right there. So without further ado, we've got Rohit in the YouTube chat. Let's throw him in there real quickly as entry number 30. Welcome to the HT giveaway and welcome to the stream. So Robinhood, 17 strike puts. And so often I say, people say, where do you get the ideas for the upcoming week? So often the answer is, well, let's just take a look at what we did last week, because premium typically doesn't come and go in the blink of an eye, with the exception of some of our IV reversion type strategies, which RCAT falls under. And we'll talk about that one in a minute. But typically if premium is there one week, it might be there a following week, because the stock may just be volatile in that way. And we can take advantage of it until the stock just completely takes off from a price that we're comfortable selling the puts at, or two, the implied volatility in the option premium just dries up and it's no longer a good option selling opportunity. Robinhood is one where we identified that it had pretty good option premium, and as it tries to find a base, let me pull up the chart here, because this is another one that's going to be a little bit better illustrated by bringing up the chart. Type in HOOD for you right there. Bring up the 180-day chart, and this thing IPO'd back in July, right around the 30s. And since then, shot up to 85. There's been some incredible implied volatility in this thing, but another one that's seen, as money is pulled out of these quote-unquote growth stocks, just a really sustained, consistent decrease in the price of the stock. And the question, we could try to use RSI to pin down when the thing is going to bounce, but the question is, where is it going to find a bottom? Because typically we could take a look left on the chart, look from a long-term perspective to see where we could find levels of support or resistance historically. But when you've got a stock that IPO'd at 35 and there's really nothing going on below that level, you don't have a lot of historical numbers to work with, right? And if you kind of follow the train of, back when it was falling back in August, September, October, you could look back and say, okay, it IPO'd at about 35, so we could expect it to at least level off there. And that's exactly what happened. This is why we use TA to try to figure out these potential levels of support, because as it levels out here, all the options you sell around this area are going to get absolutely crushed. But back to the original point, since we don't have the historical data since the IPO at 35 and hasn't been this low before, we don't really know where it's going to bottom out. We can try to look at RSI, but we can see for RSI, several times already. It's gotten into that quote-unquote blue level below a 30 on the 180-day basis where we expect it to bounce, but has moved even further down from there. But it finally looks like it's started to find a little bit of a home in the high teens. But since it's been historically so volatile, if you look at these options, there's some really, really good returns for things that are decently far out of the money, right? 17 strike put, which is what we're in for the upcoming week, is going to give you 2.32% ROR. We really only want to target, 1% or greater. I guess greater is kind of the operative term there, but we want to target greater than 1% ROR on a weekly basis without getting too risky. And too risky is what I would guess. I guess I would classify too risky as, selling in the money or directly at the money. So the 18 strike, the 17.5 strike scares me a bit. But for those of you who have watched this before, you're familiar with this yellow number up here, the market maker move of 75 cents, which suggests that, Robinhood really is only going to move plus or minus 75 cents during the week. So that would put the lower end of the expected range dead on 17, meaning these would expire worthless. So I'm happy maybe getting a little bit more aggressive, taking a chunk out by going for 2.32% at a 17 strike, as opposed to maybe dropping it down 50 cents or $1 to 16.5 or 16. But that's why we went with what we went with. I'm perfectly happy with that 17 level because as we can see, the low on the stock is 16.68. And conveniently, if you subtract, 40 cents of premium from 17, you get like 16.60, which is below the low point on the stock. So your break-even price is as low as the stock has ever been. So theoretically, the worst case scenario, Robinhood keeps dropping and you get assigned the shares, you will have these shares as cheap as they have ever been. So that is the value prop right there. I'm pretty happy with that one on a week-to-week basis. Similar to Fubo, where it's one that's trading in the high teens, a pretty volatile stock, so there's decent ROR for the options that you're selling near the money, but one that I'm perfectly happy to keep going just because of how the numbers line up, right? We looked at that MMM. There you go. Rich Wheel with a good question in the Twitch chat. So the market maker move is for the week, and the market maker move is going to be for what's called front expiry, and that means the most, the soonest to expire options. So for Robinhood, that's going to be January 7th, but if I typed in something like ASTS, where there's only monthly options, that market maker move is going to apply to, front expiry, the soonest expiring options, which are January 21st. So this MMM of $1.04 applies to this expiry of January 21st. So hopefully that answers that question about the time period that market maker move applies to. But back to Robinhood, really good one. Perfectly happy with that. Throw it in the portfolio, and one of those where, Fubo, all of a sudden we're getting a 580 gain. Robinhood, we would get a 320 gain. And all of a sudden, all these base hits, this is the type of strategy, this is the approach that we like to apply to the market. We're not going to try to bite off a huge chunk and make $4,000 on one trade. We're going to put a bunch of, high probability base hits into play. Cumulatively, the hope is that these things add up to a nice gain on the week, right? And ASTS and RCAT expire on January 21st, so we're not going to talk too much about those, but I think ASTS, solid entry. RCAT, probably not one that I would enter at this point. I'm just personally trying to let the rest of this burn off as we approach the expiry there. But since we've pretty much talked about most of what we've got, we've talked entirely about what we have expiring this Friday, but most of what we've got overall. Let's take a look at what things would look like if stocks just stayed flat, right? So we know that Fubo, if it hung tight at 1560, 1570, where it expired, or I guess where it closed last Friday, these would expire worthless. We'd have $580 of profit. If Robinhood finished right where it is on Friday, right, 1776, those 17s, they're out of the money. They would expire worthless, and we'd hit max profit there for 320. DraftKings, we know that one would expire at 53 because it closed at 2747 on Friday. That's $780 more of profit. These 19.5 calls, we're going to get that premium no matter what. The only downside to those is that they would cap the gains at 1950 for the stock that we have for Palantir. But again, if Palantir hung tight at 1821, we know that these 18.5 strike puts would be worth 29 cents at expiry. So with just these few positions between Palantir 1, DraftKings 2, Fubo 3, Robinhood 4, that's just 4 positions for the upcoming week. We find ourselves in a position where if the stocks just stayed dead flat, we're making about just over $2,000, which is over 1% return, which is quite frankly what we're targeting on the week. And that's before any of the updated trades that we're going to make during the day Monday, during the day Tuesday, during the day Wednesday. Any of the trades like that, we're already at this base level of 1.22%. So I think that's a very, very good place to be entering into the week because one, you never like to take the foot completely off the gas, right? We are a little bit wary and a little bit cautious with where the S&P 500 is currently trading. I think we're due for a decent correction, but in the end, we want to be long on the market because in the long run, the market more likely than not is going to go up from an extended time frame. So we always want to have at least a little bit in play. And with only 63% fully cash secured and 21% with margin considered, we have a very good amount of buying power headed into the week. So if we could find ourselves in positions where we have this much buying power headed into the week and we're already situated with positions that are going to get us above that 1% return, just provided the stocks stay flat, I'm very happy with where we are set up. And that's an area or a position I want to be 100% of the time. So I'm thrilled with where we are as we head into the beginning of 2022. One other quick point I want to make about Palantir and DraftKings is, I did get a little bit more aggressive, right? We like to talk about selling decently out of the money. DraftKings is at 28 strike. One thing that I do think should be a consideration is tax loss harvesting. So you could see these stocks from their peak at 64, DraftKings finished below 30 a share. So it's very, very likely that a lot of people were sitting on decent losses for DraftKings because this slide happened in the back half of the year. Most of the year, it was above 27. I mean, almost all of the year, it was at 27. So pretty much, presumably, everyone who purchased the stock during 2021 was sitting on some sort of a loss. And if you have all these gains at the end of the year that you don't want to pay taxes on, what you start doing is getting rid of these stocks that you have a loss on before the end of the year so that that loss counts towards your tax return. That's called, quote, tax loss harvesting. So the idea is that since DraftKings has fallen this far in this period of time that a lot of people were sitting on this with the loss, they would want to get rid of the stock so they could write off that loss on their tax return. That could explain some of the selling that we're seeing because I guess December starts here-ish on the chart, right? And I mean, from December 8th onwards, there was still a pretty significant drop on the stock. So at the beginning of January, the idea is that people who got rid of the stock for tax loss harvesting would potentially start jumping back in. Now, there is a wash sale period that would need to be in consideration, but I think January in general is when I would expect stocks with this kind of a set-off or this kind of a setup, especially with the sell-off that they had towards the back half of the year. January is what I would expect for a decent rebound. And that's why I've gotten a little bit more aggressive with the strikes on DraftKings at 28 being basically at the money and Palantir at 18.5 with it trading at 18.21. But again, similar price action on Palantir, pretty steep drop off towards the back half of the year. Definitely a little bit higher than where it has historically traded throughout the year. If I pop the 1 year chart, right, you'll see that things are typically much higher than $18 a share. So people are likely sitting on a lot of losses on those as well. Now, good question from DigiNets in the YouTube chat, or the Twitch chat rather. And Andy S had a question in the YouTube chat that I'll get to in 1 second. But DigiNets asks, how many contracts do you recommend to sell per stock on your list? And the answer is, it really all depends on account size, right? So we have a larger account and we got this way. I mean, we started with less than $10,000. So we got to where we are by building up our account, sticking to our strategy, not trying to take shortcuts and just patiently building up our account balance. So I think we did have someone, on Twitter earlier try to somewhat discount what we did, saying, you have a larger account. But one, the point is you can get to this point through these same strategies. It just takes a little bit of patience. But two, I throw this margin requirement thing out here. One, to kind of help myself keep track of what kind of positions I have and how much of my account they're taking up. But two, for others who are following along to say, okay, I sold whatever, 20 contracts of RCAT, but that's only 1.93% of my account fully cash secured. So if your account were, $10,000, you wouldn't want to sell $3,500 worth of them. You'd want to sell 1.93% of your account size. So this column L is here to help you scale from my position size to your position size. Now, if you're working with smaller accounts and there's some of these stocks where, it requires a somewhat larger capital requirement up front, right? Where DraftKings fully cash secured, one contract is going to be $2,800. We recognize everyone's financial situation is different, so you may not have that amount of money up front. I don't think it's the worst thing in the world to get a little bit more aggressive from a diversity perspective. And by more aggressive, I mean, starting out with 20 or 30% for one position. But in general, what I like to do, and you'll see it here for the most part, is I like to target around 10% from an initial standpoint. Because from 10%, if you follow the HT wheel strategy that we have, and let me quickly pull that up for reference. The HT wheel, if this thing will load for me, come on. I think if I go to beginner questions, it is pinned right here. There you go, the HT wheel. And position sizing is very important as we follow the process that we've laid out here in our diagram. Because as you go further down the process, if you don't win one week and have to roll a position to the next week, increasing your stake in the position is a very, very effective way to decrease that break-even price. So I recommend starting with 50 to 75% of the collateral that you intend to invest. If you're on the conservative side, which is what I've been trying to do lately, I like to start with 50%. And in general, that initial position size, I like for it to be 10% of my account. That way, and that's for some of the safer plays, right? If I'm on a riskier play, I might go even smaller just because, if a stock really, really moves against me, and these riskier premium chasing plays are ones where I recognize that the stock is a little bit more volatile, so I don't want to get cleaned out on something like that. But in general, on a normal trade, a normal safer trade, I like to start with 10% of my account. That way, if I have to double down once, I'm at 20% of my account. And if I have to increase my position by 10% again, I'm at roughly 30% of my account, which is about a third of my account. And that's about as high as I would like for it to get. But at that point, you've already pretty much doubled down once and increased your position size another point. So from those two double downs, so to speak, you already have what should be a manageable basis from that perspective. Normally, doubling down twice does the job as far as managing your break-even price. So that's why I like to start off with 10% because then you increase to 20, then 30 after doubling down twice. And I know a literal double down would get you from 10 to 20 to 40, which is why, operatively speaking, double down may not be an exact term, but it's increasing your stake in the position. After you've increased your stake in the position twice, going from 10 to 20 to 30%, you arrive at that 33% number in your account. And I think that's a pretty safe way to do it. Now, if you do have a smaller account, I think it's okay to start with, a 20% and then maybe double to 35 or 40, just because some of these can be a little bit cost prohibitive and take up more of your account, but that shouldn't preclude that play from being in your account. Now, if you have like a $5,000 account and selling one of these would take up half of your account, maybe not the best idea in the world. If you can use margin to take a little bit of that burden of buying power off, that's one way that margin helps a lot. But we always want to have our eye on that fully cash secured numbers just to make sure that we don't completely blow ourselves up with something like that. But that's the idea between how many contracts, if you were to emulate these positions that we have right here, how many contracts you should sell for yourself using this percent of your account number, just applying that to your account balance and then going from there. But Andy S had a question in the YouTube chat. How do we feel about something boring like Macy's? And Andy, I gotta be honest, I don't know if Macy's is that boring. If we take a look at the 100 or the 1 year chart, even, right? It's gone from 11 to 37, back down to 22. I mean, it's gone a ton. And DigiNets had a quick follow-up question. So on the sheet, minus 10 is 10 contracts. That's correct. We say minus 10 because we're selling options. We're not buying options, right? And our position in a literal sense is that we're short the option. So we're selling it. That's why our positions are denoted by a negative number. But back to the Macy's chart. Still not convinced that this is not an exciting trade because, from 11 to 37, back down to 23 to 26, this probably breeds some decent premium. And the best way that we could kind of deduce that is by taking a look at the implied volatility, which is, hasn't been too crazy, right? It probably spiked up here right after the big drop that it had. Nothing nearly as crazy as when it squeezed from 13 to 22 back at the beginning of 2021. But let's take a look at the options and see what we can see. That 1% ROR number, and this is where we kind of start to toe the line about downside potential in a stock. Would you really like to own something like this? We could take a look back at the 3-year chart and we could see, this thing can get way, way lower from here. If you go back to just November of 2020, this thing was trading for $6 a share. That's just over a year ago, right? That's 13, 14 months ago from today. So that is some serious downside from 26 to the point where, look, you could go a little bit out of the money here to 24 and 24.5 and still get that 1% ROR that we like to look for. But if anything, really went wrong on this and it returned back to where it was, mid-teens, gets back down below 10, you're in some serious trouble because the amount of premium you're getting on a weekly basis here, this would start you off at a 24.25 basis. If you're only taking 25, 30, 40 cents off per week, it's going to take you a little bit of time to get that back down here. And if there's a really big, significant red candle to get you back down, similar to what we saw in 2019, and that's before the COVID crash, and then something like the COVID crash happens where you see some serious red candles, but this does seem like a stock with some significant downside potential. But I always say we don't need to agree 100% on the outlook for a stock. If you take a look at a stock like this, you say, okay, I'm confident in Macy's. I have a pretty good grasp on the retail space. I think this is a relatively fair valuation for the stock. Then absolutely, this is a fantastic opportunity, right? Because if you look at 24.5, that's decently out of the money. The market maker move up here is at 84 cents, which would imply that the low end of the range is roughly, 25.40-ish, which would, pretty much make these almost at max profit. Nevertheless, if you took another dollar off that, but it would take pretty much double the implied move right here to get down to this 24.5 strike. So numbers are saying it's relatively safe. They don't have earnings for, when do they have earnings? Let's see. Let's type in Macy's right here. See if anything comes up. Nothing comes up. No earnings for a little bit of time. So this is just strictly premium on a week-to-week basis. If you're happy with Macy's, you're familiar with the stock, and you're happy with potentially taking on a 24.5 basis, net of the credit that you receive, great trade. I'm not the biggest fan of Macy's, the stock, so personally it's one that I probably will not be jumping in on. But again, we don't need to agree with with our theses on these stocks. I think the only thing that's important that we agree on is the way and the strategies that we use to play these stocks, and that is where option selling would come into play. So that's kind of the spiel on Macy's right there. We've got a good little lineup. We've been going for a little bit over an hour. Sam H has questions about Mara and Riot. We'll talk on those really quickly, and then we'll get to maybe a couple names on the scan, and then we're gonna have to hop off for the night as we are decently over the hour mark at this point. So Dan Gaskell, here we go. Another great question. Do we consider Delta when evaluating a trade? This may be an unpopular answer, especially among option sellers, but I don't tend to look at Delta too much. And the reason being is because I think concepts like areas of support, areas of resistance, using this market maker move and plotting numbers out against that, I think is far more useful than just arbitrarily looking at a delta. Because you could look at something that's maybe 30 delta, which implies that there's a 30% chance that the stock gets down to that level, and people may just blindly sell 30 delta options out of the money week after week after week after week. But if you line those up on the chart, you may see that at that strike that you're selling the option at, there's no support. If it gets down to that level, it's likely going to keep moving further down. So that's something I'm not the biggest fan of Delta for, which is why I like to use the process that we currently have, which is finding where that 1% ROR sweet spot-ish is, looking in this range, seeing if you could identify any support in that range. So example, for Macy's right here, we go to the 20-day level. We can see there was a bounce off the 23 level. Looks like a little bit of support at 24.5. So if you identify 24.5 as support, there you go, 24.5. That's above a 1% ROR. Also look at the market maker move of 84 cents. That still is above 24.5. That would, lead you to believe that 24.5 is a good strike to sell. Now, if we took a look at the delta here, 24.5 is a 20 delta. So if you looked at, wanted to arbitrarily sell like 30-ish delta, it'd be between 25 and 25.5. We can call it 25.25. On the chart here, this is kind of no man's land, right? In fact, it's between two pretty big candles, one right here on December 13th and another right here on December 15th. So just because you're picking that arbitrary delta of 30 in this example, doesn't mean that the stock's going to kind of pause right there. I think it's much more likely that if a stock gets down to 24.5, it bounces because we've already seen demonstrated bounces off of this level historically over the 20-day chart, as opposed to anything in that 25-ish range where we would see that 30 delta. So that's how I feel about Delta. That is why I don't typically use it too much, but it does kind of come out where, using the ROR approach that we do by comparing it to market maker moves and looking at areas of support, we do kind of end up in that 20 to 30-ish delta range at most times, just coincidentally. DigiNets asks, do we have access to the Google Sheet? Absolutely, you do. If you go join our Discord server, which you could do by going to hourglass-trader.com, you go to the Discord server, you go to Profit Tracker, There you go, right at the bottom right there. It is right here. And you can click on it and you will be able to see our spreadsheet and track it with us, right? So everything that we've done in 2020, 2021, and coming up in 2022 has all been publicly tracked via one, the spreadsheet that we have right here, and two, pretty much timestamps on every single trade that we've made, historically, entries and exits. So you could verify that we are just not entirely talking out of our ass with the returns that we've made. And again, if you do want access to these trade alerts that we have for entries and exits, 770 of profit, not too bad right there. That would cover an entire 3 years of HT Premium. Sign up for HT Premium if you want to get the alerts to trades and get notified when we enter, when we exit, and more, such as the option scanners and things like that we're about to be taking a look at. Let's see. Sam H had a question about Mara and Riot. Bitcoin's a little bit scary to me. I actually haven't admittedly looked at the charts of these recently, so let me take a look at these before actually talking out of my ass. But 180, decent level of support. Bitcoin obviously has dropped below 50,000 lately. People are getting a little bit scared about Bitcoin. Definitely a key level of support here in the low 20s. Let's see what 20 offers. A 1.7% ROR. I got to be honest, not too bad, especially for something that tends to jump up a ton when Bitcoin rallies. I don't think a 20, especially looking in the last 180 days, 20 may not be the worst break-even price in the world. I know you're probably not going to get any margin help on these, right? If you take a look at the potential trade, you get a little bit of margin help. Not the worst thing in the world. Wouldn't be, especially at this point, right? We like to talk so much about entries, getting into things when they're oversold. If we bring that RSI study back up, we'll see that this thing is definitely getting into oversold territory on the 180 day. Not quite where it was, right? And to the other point that we talked about a little bit earlier in the stream, you do want to avoid stocks where you could have these huge drop-offs in price. However, it looks like that may kind of be behind. Although, I don't know. This thing's pretty volatile. Crypto is pretty volatile, and that's why I don't typically play these crypto-related stocks. But if there were any good entry point over the last 180 days, except for after the two massive ones where RSI got down into the blue right here, this isn't a bad one. And, to the point of RSI getting into the blue, it looks like pretty consistently when it gets into the blue, it is historically bounced, right? So the RSI is a great indicator for something like Riot right here that we've seen. Another good bounce in the blue right there. Another bounce right after it gets into the blue up to here. Not quite into the blue, which might suggest that there might be a little ways to go down here, but definitely some support in the at the 22-ish level. And then you see some bottom candle wicks at the 20.68. So 20 seems like a safe strike. If we were, objectively just looking at the numbers here, it offers above a 1% ROR. That would line up with what we go for. I personally stay away from crypto because I just don't like how volatile it is. But if you're taking our approach, and again, we don't have to agree on the stock, but if you're taking our approach, that 20 does look pretty good. Let me make sure I have got everything in here before we go to the scanner. Here we go. We're going to update our HT giveaway. Last person we put into the HT giveaway was Rohit from the YouTube chat. There we go. And our next one, here we go. We've got Mankiller33, aggressive username. Mankiller33 from the Twitch chat. We've got JC from the YouTube chat. Joe Motorhead from the YouTube chat as well. And then we have, let's see, Matthew M from the YouTube chat. So there you go. Entries number 31 through 34 belong to Mankiller, JC, Joe Motorhead, and Matthew M. Welcome to the stream and welcome to the giveaway. And there we go. A last second entry as I'm doing all this. We've got VS from the Twitch chat getting in at number 35. So we're over an hour on the stream. We're going to go to the scan real quick, try to see if we can pull out a couple names. And while we have the Discord tab up, let's take a look at earnings really quickly before we do that. Kind of spoiler alert here. It doesn't look like there's too much going on in the way of earnings this upcoming week. That's typically how things look as the year turns over. There really wasn't anything over the last couple weeks. Typically, we won't see a lot of earnings in the first week of the year. But, things are going to pick up, so definitely an area that we want to keep our eye on. Only thing that really pops out to me here is going to be Bed Bath & Beyond, because that's typically one that has made some pretty big earnings moves. So let's at least throw this thing up there and take a look and see what we can see. So there you go. From a technical standpoint, fantastic, right? Because kind of on a low end from a 180-day basis, the thing got up to 48.4. We're approaching a support level at, what seems like 14. 14 looks like fantastic support. It's at 14.56. If we go to the trade tab, you're going to see that market maker move is $2.50, which would imply a low end of the range of 14.5 minus 2.5 is going to give you 12. So if you go down to 12, you see that you can get a 4.12% ROR on your investment. I mean, these are some phenomenal numbers on Bed Bath & Beyond. Look at this. This is why we love to target these earnings trades, because you have a stock that has a range of 13.38 to 48.4 over the last 180 days, and you could sell options down near 11 and get yourself a 2.14% ROR on earnings, which is below the market maker move. I think that's a fantastic value prop. Let's look a little bit further back, because I think there's definitely some perceived potential downside. Let's extend this out to the left, see how that thing looks. I think the next level of support below 14 would really be this 750 level, maybe 11.34 right here. I kind of like how this lines up with this chop down in here between August and September of 2020. But yeah, I think the next two levels of support that we can see on this graph are going to be 14 and then 1150-ish. So I think I'd be perfectly happy selling an 11 strike put on this thing for 2.14% ROR. And let's see, do we get any margin help on this? So we get a little bit of margin help, right? So ROR is what the return that you would get if you sold things fully cash secured. ROC is return on capital or return on collateral based on margin. So since we get about 50% margin requirement, this would go from a 2.14% ROR to a roughly 4% ROC. So that is a great earnings trade for us potentially. And to the point, their earnings, if we go back to that graphic that we were looking at a second ago, they're going to be before open on Thursday, meaning that we're going to want to sell these Wednesday afternoon. So to avoid any price risk in the meantime, right? Because if we're playing earnings, we want to strictly play earnings. We don't want to play Monday through Wednesday when there aren't any earnings. So our idea is to, kind of wait till Wednesday right before close, sell the options. Thursday, earnings happens, all the implied volatility gets sucked out. Hopefully it goes up. Even if it goes down, it has to go down a long way to potentially get down to this 11 level that we might sell at. So that's the idea. Hold off until Wednesday afternoon, but I love the way that the returns are looking at on this one off the bat, and this is a great example of why we like to look to earnings so often for some of our option selling strategies. So Bed Bath & Beyond definitely want to keep on the radar for the upcoming week, and I think now I'm kind of caught up with everything I want to talk about before we get to our scanner really quickly. So take a look. These are all options without earnings. And again, we bring this in by going to load, scan, query, personal. We have all of these in here, and you can import these all through our option scanner page on our website, hourglass-trader.com, if you're signed up for HT Premium, which again, we talked about those trade alerts. We talked about the premium chat room. This is also one of the benefits of what you get. So if we scan for this really quickly, I think I did it right before the stream, so these options should be up to date. There you go, right? 8.63%. Pretty high up, but a lot of these are, this is a Chinese stock. We have a Bitcoin stock right here. Biotech. We don't love the industries a lot of these are in. Every now and then you'll see something like Wish right here, right? A 3-strike put offering 3.33% of premium. Let's take a look at Wish. Not the best stock in the world, but it's a situation where, if the numbers look good, it might not be the worst idea in the world, because a 3-strike put, which is out of the money by 11 cents. And if we pull up our crappy little system calculator, if I can get it to come up. Come on. There she is. So if the stock dropped 11 cents, right? 11 cents divided by 3.11, right? Because an 11-cent drop would get us down to that $3 strike. The stock would have to drop 3.5%. So basically, in plain English, as long as Wish doesn't drop 3.5% next week, you'd hit max profit right here. And what max profit right here would be is a 4.71% ROR, which is phenomenal, right? We only like to target one, but sometimes with these smaller trades where it requires less collateral, you can afford to get a little bit riskier, right? Because if you sell 10 of these, you're taking home a $130 profit, but at the same time, you're really not getting too significant of a position, right? Normally, from a percent perspective, we'd like to start with 10%, which would be like 15-ish thousand. And, don't let those numbers scare you. Percentages can be applied to your account just as well as they can be applied to mine. But, this is a smaller percent of our account while still generating a decent return of $130. And sometimes we target bigger stocks where we try to target a $130 return, right? Fubo last week that we sold for 16 cents, we tried to target a $160 return for 15,000 of collateral. This is a far better ROR. And with that, if the trade does move against you, it's much easier for you to double, triple, even quadruple down if you start with a small enough position up front. So I got to be honest, even though I don't love the stock, we see Wish has a 294 low on the chart. If we bring up the 1 year chart, I think this might be a good way to look at it. We've played this one several times, and despite the continued downtrend from Wish throughout the back end of 2021, every single time we played Wish with the bullish position, we made money on it. So it's one that's turned out really, really well, because every now and then these things get pumped up with some premium, and I think this is a phenomenal example of that, right? Because even if we do get assigned, right, our basis would be $2 and roughly 87 cents. 287 is lower than this stock has ever traded. And even if we took that 287 basis, we can turn around next week, maybe sell 3 strike calls for about 20 cents a piece. That basis would then drop to 360. And then if we sold 250 calls, so on and so on, if you're familiar with our HT wheel process. But if you have a smaller account, you kind of want to get your feet wet with maybe a riskier stock where you could have that cushion to potentially double or triple down in your account and want to see the process play itself out. I think Wish is going to be a very, very good example of one for the upcoming week. So I love the idea of jumping in on some Wish 3-strike puts tomorrow morning when the market opens. I think maybe selling 20 of these for my account off the bat, targeting about 260-ish bucks of profit would be pretty solid. Would not be, don't hate those numbers at all. So Wish looks good. Bed Bath & Beyond looks good for that earnings trade that we talked about. But again, back to the scanner, right? Because this is one that we had on our watch list, but every now and then premium comes, premium goes. When premium comes back into it, we'll see it on the scanner. So this is the advantage of having that scanner. We've got Weight Watchers, I think, in here. WW. This is one that I've played from time to time. If this one loads, we could take a look at what the chart's looking like. You can get a 1% ROR on the 14 strike puts. What is going on with this one? I mean, this would almost imply to me that they're about to have earnings or something like that. But if we type in WW down here, this is the easiest way I know of, at least, to check for earnings. We don't see any corporate events coming up for it. Let me actually, because I feel like I've been led astray maybe once by doing that. Let me check on Weight Watchers earnings. And their next earnings are going to be, let's see what we could find right here. That's not what I'm looking for. There you go. February 3rd, 2022. We've got Jiggy Snipe, who is a valued member of the HT community, who's always lurking there to correct me. Check the Analyze tab for earnings. We go to earnings. We go to WW. Oh, there you go. February 24th. Awesome. Okay, that is very, very helpful. That does conflict a little bit with what we saw in line with February 2nd, but moral of the story here is the fact that Weight Watchers does not have earnings this week. So there we go. Good question here from OTOBEIT. And again, I know better than to try to pronounce these things because it just makes me sound like an idiot. How do you get the ROR field in your option? I guess right here is what we're talking about. So you can just click on these and, put what you want in here, right? I think one that I like to look at is volume because it's important to know how many of these options are trading a day. But if you go to option theoreticals and Greeks, return on risk is how you're going to get ROR in there so you can analyze those positions as you take a look at them quickly. But yeah, Weight Watchers, this looks very, very good. And I would, tend to think that if I take a look at the live news here, there has to be some sort of upcoming event here. Size of board is going to be reduced. Let's see. I mean, maybe there's some sort of dividend or share unlock that's upcoming where there would be a decent case for a decrease in the stock price. But typically, if there were that big of downward pressure on the stock, we would only see put premium. But we also see call premium up here, right? And if we, I don't know, let me jump back into the 20 days. Has it been super volatile in the last 20 days? Yeah, you have this big candle up from 15 to 17, which obviously is going to pump some implied volatility in there. And you've moved from 19 to 15, which is also pretty significant. But zooming out, if you can go down to 14 and get some option premium on these, sell these for 15 cents a pop and get that 1% ROR, not a bad place to be. You get a decent amount of help from a margin perspective. I don't know how I feel about owning the stock, right? But on the 1 year, this is about as good of an entry point as any. So I don't hate this one either. And really, the low in the COVID crash was 975, and that was a very quick wick on one of the candles where the bottom end of the candles stays at about 14-ish a share. Electrode showed saying, ex-div date, which is something we ran into with URA, a uranium stock last week. With URA, though, with the ex-div, there was no call premium, so I was pretty confident the stock was going to drop. But with this one, you have call premium in it, so I would not hypothesize that there's something like an ex-div date going on in there. One final quick check that we like to do sometimes is just to go into Twitter really quickly and just type the stock in to see if people are tweeting about something that could be a potential upcoming event that Thinkorswim wouldn't, typically outline for us. Got to use all of your avenues for research here. But nothing too crazy on Weight Watchers. Let's see. A lot of people say they're buying Weight Watchers, but yeah, I like what we see from a premium perspective. I don't know if I'm in love with the company, but definitely a good idea to have in play if you're able to get that 1% ROI around this 14 level. So another good one from the scanner right there, along with Wish. And let's see if we could find maybe one more on here before we call it a night and have our HT giveaway that I'm sure you all have been anxiously awaiting tonight. Robinhood popped up there. This is how we found that out the other day. Let's see. Palantir's on here. That's another one that we had on our list. Not seeing anything terribly exciting. Beyond is one that we like to play sometimes. It's back into the lower 60s. 65, 16, you can get that 1% ROR. It looks like down at 60 on the dot. That's not a bad one at all, because a $5 drop off of a $65 stock is like a 10% drop. So, in plain English, this is basically telling you that you'll get a 1% return, provided the stock doesn't drop 10% in a week, which, objectively seems like a pretty good bet normally. And the bottom end of the support that we've identified around here is at about the 55 level. So maybe if you take that one on, be careful. But another one that doesn't look too bad from an option selling perspective for the upcoming week. But I think those are some good ones to keep in mind as we head into the upcoming week. Right, I'll throw these right here. Wish, Weight Watchers was one that we just took a look at. Beyond looks interesting. But again, keep an eye on the scanner during the week. One other thing that we like to keep an eye on that we're going to try to make a little bit better of an effort to keep an eye on is our IV Reversion Scanner. Because, with the stock market running up so much, one of the things that we like to consider is, how can we enter into some trades that aren't going to get crushed if the market pulls back? And IV reversion trades are a great example of that, because there's stocks that are relatively disconnected from the market, have had these huge spikes in their price. So even if the market crashes and they come tumbling back down to earth, we have some pretty massive cushions on those. So RCAT is an example of that, where we jumped in on that. I forgot what the stock was trading at. I can pull the chart up really quickly. Yeah, it got up to about, almost $3 a share, and I think we jumped in at about the 230-ish level, right? So off the bat, even though it's trading at 208 right now, when we jumped in when the stock was at 230, we had a 23% cushion on the stock. That since has eroded to 15, but again, we're 3 weeks out till expiry. The stock looks like it's leveling out a little bit. I'm perfectly happy with that trade, but again, that's the idea behind those IV reversion type trades. Disconnected from the market, but this is the scanner that we use to try to find those. It basically just identifies some high flyers during the day where we'd have some opportunities for that implied reversion trade opportunity. So let's see. Without further ado, I think we've got everyone entered into the HT giveaway. We have 35 total entries this time, a new record for entries. So thank you to those of you who have entered. Thank you to those of you who have tuned in week after week. But let's get to it using the Google random number generator. Very official for our giveaways here. Okay, minimum is going to be 1. Maximum is going to be 35. Let's see who is going to take home the tumbler. 3, 2, 1. Drum roll on my desk in here. I don't even know if you guys can hear that. But congratulations to number 16. Number 16 is Fluffy Duck 264. You are now the proud new owner of an HT branded tumbler. So if you are on I have no way to contact people that are in the chat for the stream, so if you won the drawing, Fluffy Duck, this is specifically geared towards you. Reach out to me on Twitter, on YouTube, on our Discord server. Just find some way to reach out to me, give me your information, and we will get that HT tumbler shipped out to you as soon as we get those in. So congratulations to Fluffy Duck 264. And again, we do these streams every Sunday night, 9 p.m. Eastern. We're going to have another HT tumbler to give away. So if you did not win this week, you will have another chance. The following week, we've got, I think I got 10 of these things to give away. So we've got several more giveaways in the queue. Just be sure to tune in same time next week. We're going to be talking about the same stuff. Hopefully this number will be, maybe even bigger than 2,000 by the time we're talking next week. But again, these are the strategies that we put into play. If you're newer to option selling, feel free to come into the Discord, join the community, give that HT Premium a free trial just to get kind of a feel for what we're doing. And I think it's an investment strategy that I love so much because it's very, very low maintenance. Like, we could do nothing the entire week and just let these trades play out and make this much money. So if, I'm a full-time working professional, if you're a full-time working professional and can't afford to be sitting over the computer during the entire day, this is the perfect strategy for you, because we can quite literally from this point forward put 0 minutes of work trading in this week and still be in position to make this kind of money. So it's a great strategy, hands-off type strategy. But, these are the types of things we're talking about every single day in our Discord server, but every single week on the stream. So thank you for those of you who are tuning in. Rich H in the YouTube chat, loving the optimism. By the 10th week, we're going to have hundreds of entries. That's kind of the idea. I'm hoping that that continues the growth we've got here. But yeah, congratulations, Fluffy Duck. Reach out to me on Discord, Twitter, YouTube. Just find some way to get your information to me. We'll get those sent over to you. But once again, thank you to everyone who's tuned in this week for the stream. We are going to sign it off with the same corny way that we sign it off every single week, saying thank you for watching. This has been the Hourglass Trader, where as time passes, we make money. Thank you for watching, and hopefully next week we talk to you with more money in our account than we had when we were talking tonight. Thank you guys so much, and hopefully almost made it the whole way without stumbling over my words, but hopefully we can see you guys again next week. Thank you.